Good morning and welcome to the Leadership and Insurance podcast. I'm your host, Alex Bond, and I'm very lucky today to be joined by James Cowen of Humn. James, good morning. How are you?
Good morning. Very well, thank you. How are you, Alex?
Yeah, I'm good. Where are you calling us from? Is it a funky WeWork office? I saw the WeWork mug, so I'm assuming it might be.
It is a WeWork office, in Hammersmith that we are soon to move out of, actually. We are being kicked out because they're closing this office and move into one nearby. So I think they're consolidating their offices in the new age that we are living in.
Yeah. Well, that makes perfect sense. How is the WeWork experience? We're in a similar thing. We're in a Spaces, which is kind of it's Regis trying to be cool, but it doesn't quite have the same kind of startup-y vibe. It's a bit more established, but yeah, how's it work for you?
I mean, it's fantastic because we have two offices in London, soon to have offices in other cities as well. And just the flexibility of being able to ultimately, have some of your staff in the office at any one time. They can also go to different offices. So in some instances, because my home's in Battersea, I go into the Waterloo office and just base myself there just for a bit of peace and quiet away from the family, as it were. So you can do that. It's very easy. And then again, when we're starting to travel, which I think is happening, in the coming months, as we go to other cities, basically you can just go and base yourself in whatever, Paris or Amsterdam or Madrid or whatever it might be. So hugely advantageous from that perspective. It's interesting to see how they are changing. All of the offices are empty. All of the sort of communal spaces are absolutely jam-packed with people who are obviously escaping home and sort of wanting a bit of freedom or a bit of the office environment without having a big office, because people are working remotely. So it's fascinating to see how they've changed in the last two and a half years.
Although I can tell you where they're all going, because we were just discussing. I'm down in Brighton. You can't find office space for love nor money, because everyone's setting up these kind of satellite bases where all their staff live. So,
I can imagine.
Yeah, but anyway, we've started on WeWork's business strategy before we talk about your business. So,
yes.
Thank you again for coming on. Always like to do this. Be great if you could start and introduce Humn, what you guys do, and the business.
Yeah, no, of course. Firstly, James Cowen. I'm the CCO for Humn. Been so for the last couple of years, pretty much actually since the world turned slightly south. So really leading the charge when it comes to strategic partnerships, strategy of the company, as well as our expansion initiatives. Humn itself, we're a commercial motor insurance solution, basically based on data science. So we've built a unique data platform that ingests data in real time, coming from drivers, coming from vehicles, and coming from the environment around vehicles. And this ultimately allows us to understand the risk of a vehicle at any moment in time and to price it off the back of it. So we do basically per trip insurance for commercial motor fleets. And then alongside that, to help those fleets become safer, reduce that risk, we give them access to a platform. And this platform gives them tips and hints about how you can help driver X or driver Y, how you can make them safer. So the next time they go on the road, as a rideshare driver or as a courier delivery driver, they will drive safer, they will drive better. Ultimately, their risk will be lowered and their insurance will be lowered. So we're offering something it's very unique in the market, and it's really sort of grown very quickly in a short space of time, which is super exciting. And sort of now looking to the next stages, which is both expansion in the UK and also entering the European market in the coming months too.
Awesome. Brilliant. Thank you for that. It's loads I want to unpick there. Now, I know that we mentioned that this is I suppose the first thing I want to ask you is why offer an insurance product? You've built a SaaS product essentially, and then you've built an insurance product on top. And I suppose, is that a demonstration of the capability, or will we go to a pure SaaS play in the future, or was it always intended to be an insurance product?
Yeah, so it's a really good question, because the initial ambition of the co-founders was basically to build the data science platform. It wasn't to build an insurer. That was definitely not on the agenda. If you look at the background of all of the four co-founders, it's very much data science. They've been building, or they built data platforms for hedge funds, banks, credit bureau agencies. They basically know what to do with data, how to ingest large quantums of it and provide analysis insights off the back of it. They came across commercial motor, saw this huge opportunity to build a platform that understands risk and to sell it into the insurance industry. I think the challenge they found was that when they started talking to insurers, when they had an MVP, 3, 4, 5 years ago, they actually found that it would be very hard for these insurers to actually use that platform to its maximum potential and to leverage all of the insights, to know how to use it, how to do dynamic pricing. And second to that was a lot of these insurers said, this sounds great, sounds fantastic. I've heard of similar ideas. Come back to me when you've actually proved it out. Come back to me when you can show that it reduces your loss ratios or your accidents or your premium, and then I'll be really interested. So I think at that point, the team sort of took a step back and thought, actually, the way to do this is, firstly, let's build out this data science platform. Let's make it amazing. Let's make sure it can understand risk and help risk. But then actually, let's build an insurance layer on top and actually go through the regulatory process, because then actually we are providing the most value to fleets and we are in control of it. And then in the future, and I think we're at this point now, it's a case of we have this insurance solution stacked on top of data science, but actually maybe there are markets or opportunities where we can leverage the data science platform and sell it into insurers in markets where perhaps they're non-competitive or markets that are more difficult to enter from a regulatory perspective. Mm-hmm. So I think there will be opportunities in the future where we basically sell it as a SaaS platform. Mm-hmm. But at this moment in time, our focus is very much on, leveraging this unique platform. I mean, over half of the company is still working on building out that platform. We're still sort of data science at our core, with increasing expertise when it comes to insurance, which is layered on top. So it's finding the balance between the two. But I think initially it was too hard to sell, too long a sort of sales cycle. And also, would they be able to maximize the potential of the platform without basically our understanding of it and our ability to prove it as a case study to the wider market?
Mm-hmm. I'm going to jump ahead actually, because I had scheduled to ask you this question a bit later, but I think it so correlates to what we've just been discussing. You guys raised some investment fairly recently, didn't you? Yeah. And I wanted to talk to you about that process. Generally, I'm always interested in that process, but particularly, and it might be unfair of me to ask because, UK's a based company, and I'm sort of going to ask that UK versus US thing. But it seems to me that the culture of investing in the UK is that you have to prove your hypothesis before you can raise money. That doesn't seem to be so much the case in the US. If you've got solid, idea and you can tend to run with it a little bit earlier. Is that something that you found? And I suppose how do you feel about that as a sort of business? I don't know. It plays to my sensibilities, but I can understand the frustrations of it as well.
Yeah, I mean, it's a really good question. I think it's absolutely correct. I think there's definitely a difference between the US VC market and the UK or European VC market. I think the gap is closing. I think in the last 2 years, there's been a huge amount of VCs coming over from the US, setting up offices, having a number of partners based over here and really targeting European businesses, because I think they've seen a lot of successes, unicorns, and obviously a lot of people in the space as a whole. So there is a closing of the gap, but there is definitely a difference between a UK or European company where I think you have to prove yourself a lot more. As you say, you can't necessarily just come to the table with a sort of pure idea and perhaps really good experience from some of the co-founders. I think here you actually have to have some kind of data points, some kind of validation, and interest from big contracts, whatever it might be. Whereas in the US, I think if you're in the right area, the right space with the right co-founders, I think you can raise really large rounds at good valuations on sort of theoretical ideas. But I think that's a lot harder in the UK and in Europe. But I think that gap is slowly closing. I think that gap will close further with sort of European becoming a little bit more US in that regard, and probably the US probably slightly reducing the size of their rounds, the size of their valuations. I think it will probably slightly fall away as they focus more and more into the European market. So I think it's going to be really, really interesting. The other aspect that I think is important is, if you want to raise money from a US VC, you need to have some kind of presence in the US. It's very hard to sort of go and raise a round in the US without, being actually located over there or have offices or have significant presence. And I think you can see it with most startups that as soon as they gain traction in the UK or in France or in Germany, whatever it might be, 9 times out of 10, the next market they're focused on is the US because of that reason, because then you have access to this pool of capital. The difference for us is, being in a heavily regulated industry, it could be difficult to actually enter the US because regulation is state by state. There are also other challenges associated with that in terms of commercial motor, which means that for us, our focus, for the next 2-3 years is really on UK and Europe. So therefore, we're slightly restricting ourselves in terms of, we can't access, big West Coast VCs that are over there that need a presence in the US. And we need to focus on, European ones. I mean, to date, it's worked, really well, but it definitely restricts you in such a regulated industry as this. Whereas if you were, selling candy bars or selling rideshare, I'm sure we'd be in the US by now.
That's interesting, because I was thinking as you were talking that did the kind of, I don't know if it's fair to say it's a pivot, but the evolution of the business from SaaS through to kind of an insurance play, surely that therefore had a quite big impact on the investor pool that you go out to, the types of investors you were going to as well.
Yeah, I mean, as a result, we're focused predominantly on, I suppose, ones that understand insurtech. And the second aspect to that is ones that understand, commercial motor. We've got investment from a number of, insurtech investors, strategic investors that understand commercial motor, like Shell Ventures, for example, that are super excited about, what we can do in the commercial motor space, which is obviously a space they know, pretty well. But our focus has been on that. Alongside it, I think, which is interesting, is we picked up a lot of sort of private equity money, which I think is helpful as we go to the next stage. You probably saw at the end of the last year, we acquired a company in the UK, a traditional MGA called Walsingham. So we have this ambition in terms of organic and inorganic growth, which I think is, again, different to a lot of players in our space, especially at our size of a company. So we've built out a nice pool of capital that's both private equity, it's both insurtech related, and then sort of more strategic, as well as some of the sort of pure financial investors that you just generally pick up along the way, but really helpful when it comes to understanding how we scale this business, how we look at an exit in a number of years' time. What are the sort of the thresholds that we need to hit, for example. So we've got a nice mix of capital behind us that is highly supportive, which is fantastic. So we don't need to worry constantly about raising more money, because our existing investors have to date supported us, as long as obviously we continue to hit the targets that we're saying internally.
Yeah, absolutely. Yeah, I had a good conversation with someone yesterday about smart money, and they're in the middle of the raising, and they were sort of saying the mass turn off of kind of having to explain the things that you think are fundamental in your offering, and then you think it's not a discredit to the investors, you're just in the wrong room. And it's because if you're having to explain like regulatory constraints, then the expectations are going to be wrong, and it's all about kind of getting that right partner, because otherwise you spend all your time focusing on the things that don't matter. So yeah, no, that's really interesting. So talking about the team as well, just going back to that, you said still kind of a heavy mix focusing on the data science side of the platform. What is the kind of mix there internally with the kind of insurance knowledge to kind of maybe SaaS knowledge or kind of data science knowledge? I'm always interested on that blend, and how many insurance people you had to sprinkle through to make it viable?
An increasing number of insurance people. I mean, we need the insurance expertise. We now have, I think, about 80 people in total, predominantly based in the UK, but also dotted around Europe and actually into the US too. Probably 50-60% of those people are in data science and engineering, so really focused on the platform, improving our ability to understand risk as close as we possibly can and in as granular way as we possibly can, and ultimately to help fleets lower that risk. But I think in the last year and a half, our biggest growth has come from, let's say, the commercial side of the business, hiring people that know commercial motor, people that are in the insurance industry have the right contacts with brokers, with the wider industry. I think that's incredibly important, because the insurance platform is only a year and a half old, whereas the data science has been going for 4 or 5 years now. So it's a much earlier stage of its business, you could say. And then obviously we helped that by the acquisition of Walsingham at the end of last year. So we got basically a team of people that have been operating in commercial motor, have built out a brand name, great reputation in the industry, and you come with sort of 10 plus years of experience. So all of those guys and girls have come across, they're adding a lot to our existing capabilities. So I now feel that we actually have in the company a good mix between data and what that is and how we can build that out. And then actually the other side of things about how we can actually turn that data into an insurance solution that customers want, that brokers like, that we're given all the reports that we possibly need, and ultimately providing, hopefully great value to brokers and the end client, whoever that might be. So it's finding that balance. I think in the future, we need to continue to invest heavily in data science and engineering. It's what makes us unique at this moment in time. There's no one like us in that regard, because we are, data science at our core. But also at the same time, we need to make sure that we are an insurance company. We have all the regulation, the GDPR, all of that good stuff that goes with insurance. Make sure we're working with capacity providers, reinsurers, brokers, clients, and all of those things. So it's a nice mix between the two. But yeah, originally our foundation is really data science, and then insurance has come on top.
Yeah, that's interesting about the sort of foundational first. James, your face is frozen, but I can still hear you, so we'll keep going. But
sorry,
it's all right. We just might have to
never rely on Wi-Fi.
Yeah, we might have to edit you out. It might. Otherwise, it's a rather unflattering pause.
Oh dear.
Never mind. We'll be kinder with you. So I want going back to that kind of mix as well. Do you think there's a kind of, I think some of the challenges that we have is going back to kind of talking about incumbents. Incumbents are kind of coming to this type of tech solution kind of almost secondary. It's not primary in their nature. Do you think there's a huge advantage in being a sort of tech first business as opposed to insurance first and then trying to implement tech solutions afterwards?
I think it's a really good question. I think there's advantages of both. Very clearly, there's a lot of very successful insurers out there. They've been doing insurance from day one, and we'll continue to sort of focus on that. I think the great thing about what we are doing is it's different. It's unique. There's no one else out there, whether it's insurtechs, whether it's your large traditional insurers. They've ultimately built insurance engines. Potentially they've been built on tech, potentially being built offline, depending on the age of the company. But ultimately they're still offering pretty traditional policies to their end clients. What we have done is come a completely separate way and built out this data engine that gives us a unique advantage, to our understanding at least, about how actually to price things and to price it in a dynamic way, and then also to help the fleet become safer, reduce their accidents, reduce claims, etc., etc.
Yeah.
So to us, we feel it is a unique selling point. It's not for everyone. Some fleets out there that perhaps are not risk conscious, or they just see insurance as a line industry or a line item in their P&L. They don't potentially want to work with us, and that's absolutely fine. Whereas we're really looking for fleets that are risk conscious, that want to improve the efficiency of their fleet, reduce risks, reduce the premium if they possibly can, and that's who we're targeting. So I think whether it's better is really hard to say, but I think it gives us a unique selling point. So when we talk to brokers and we talk to customers, and they ask the question of why we should go with you as opposed to someone else, I think that's what we say is it's all about, if you want to work with us, reducing the risk of your fleet, reducing the risk of your drivers, we have a platform that does that. And I think the second thing to that, which is really important, is insurance in the commercial motor market has operated basically in its own silo for the last 10, 20, 30 years. Alongside that, as a fleet, you probably have a risk management solution, you probably have a fleet management solution, you probably have telematics, you have all of these different things. But actually the insurance side of things hasn't really looked at that. The best case scenario, if you're working with an insurer, is you might get some kind of discount if you install a black box or a telematics device. But they're not looking at what you're doing on a daily basis, how you're engaging with the drivers, how you're running this training program, whatever it might be. Whereas to us, we have combined the risk management, the telematics, and the insurance in one, so that hopefully, as soon as you start to do, really good risk management with your drivers, it will come through into your insurance, which is obviously roughly a quarter of your total cost of ownership. So that's where we can make a real difference and deliver this financial incentive to the end customer, which to us is ultimately what it comes down to. Clients want to, save money. And that's what we can do by getting them to engage in the risk management, because it ties through to the insurance. So that gives us something that we feel is very different. And I think we're starting to see it, with the numbers that are coming out of, the clients that we're insuring. We're really reducing accidents by a significant portion. We're reducing their premium. They're making savings, and then when it comes to renewal, they're renewing with us, which is obviously what we want to deliver at the end of the day.
Yeah, it's a theme, isn't it? I mean, it's a theme of things that we've seen. The way that you're approaching that relationship with your customer is similar to some of the cyber propositions we've seen, cyber MGAs we've seen, particularly in the US, where they've got that kind of engagement of improving your cybersecurity, or at least, and some of them have gone further and sort of proactive response to it. And then there's a business called Counterpart Insurance in the US on management liability side, and their USP is about kind of proactively working with you to improve your risk over the kind of lifetime of your policy. So you get more touch points as well. Is that kind of baked into it? There's improved touch points with the consumer, because the stickiness is a factor in, particularly in motor, because it's so price driven. I was wondering why you think that data transparency is such a kind of USP. Why has this not kind of been something that we've kind of been looking to share before? Because the level of data you provide is obviously far outweighs what we've been able to offer previously, but we have had data previously, we just still haven't shared it. So I suppose there's a sort of culture versus tech thing there as well.
Yeah, and going back to your previous point, I think that's absolutely right in terms of the touch points. And I think insurance in the commercial motor market, I think, to my mind, has been heavily transactional. You sign up for a policy today, apart from obviously the claims that happen in the next 12 months, you have very little interaction really between the fleet and the insurer. Whereas with us, you have access to a platform, you have access to our customer success team that are helping you engage with that platform, make sure you're training the right driver, giving you the insights, whatever it might be, walking you through that journey. So therefore, there is that sort of day-to-day engagement that drives value, obviously on our side, because we obviously want less claims to happen, and obviously on the fleet side. So I think we're really focused on a sort of relationship or sort of partnership aspect to insurance versus the fleet. So it's different to the wider industry. I think coming back to your sort of second question in terms of data, I think it's only been in the last, let's say, sort of 5 to 10 years where there's really been enough data coming from drivers. We, for example, are looking at data coming from various rideshare platforms. So we understand who the driver is, where they're driving, how they're driving, quality of those rides, whatever it might be. Same for other courier platforms at the same time. So we have a really granular understanding of the driver. That's only happened in the last 5 to 8 years, probably, with the likes of Uber and Bolt and others that have come to the market. When it comes to vehicle, telematics as an industry, has gone from sort of zero to hero in a very short space of time. The quality of data that's now coming from vehicles, either directly or indirectly, has improved significantly. Also, the frequency of which they are sharing that data is much better. We need, for example, 1 hertz data. So we need data coming every second, basically, from a vehicle to understand, what it's doing now and in the next second. You need that granular data. Otherwise, if you're looking at every 30 seconds, there's that, huge period where you don't know what the vehicle is doing. And then around it, the environmental risk, everything from, pothole data to crime data, to mobile footfall, to road curvature, weather, open times, closing times, all of these things, really developed only in the last 5 to 10 years. And I think that's the huge advantage of what we have, is that we have co-founders that have built companies based on data. So they know how to use that data, ingest it, analyze it, and ultimately monetize it in a way. Whereas I think it's much harder if you build a company, you still have access to a huge quantum of data, but to actually turn that into something that is valuable, that's associated with the main name of the company. And I think you see that in the wider industry. There's a lot of corporates out there that have access to a huge amount of data that is, heavily, it's got a huge value to it, but it's very hard for them to actually monetize that and turn it into something. So I think our advantage is that is our core, and actually the thing that we're catching up on is the insurance side of things, and we're doing that via a combination of hiring the right people and then also acquisition as well, so bringing in that expertise alongside it. But I think it gives us a real unique selling point when it comes to what we are doing, because understanding risk, working with a telematics service provider to integrate their data, to validate, the quality of that data. We spend a lot of time with every telematics company that we integrate, making sure the data is of the right quality, that we can fully trust it, because ultimately we are pricing off the back of it. So if there's inconsistency, or there's an issue with the X and Y coordinates, ultimately we are the ones that are going to cop it because we're pricing off the back of it. So that to us is our sort of bread and butter, I suppose you could say.
There's it's really useful to think about. I was just thinking about the sort of some of the other earlier forays into things like telematics, and obviously a lot of people have gone, we've got better data, we're going to write to underwriting profit, and they haven't been successful. I wonder what specifically is different about the way that you guys are looking at data that means that isn't going to be the case, or it isn't the case, because there's been lots of kind of forays into this space. Better uses of data has been the kind of promise, and it's not quite delivered to that. Where have those businesses potentially gone wrong, or more importantly, what James are you looking at slightly differently?
Yeah, I mean, it's a really good question, because I think ultimately, if you talk to most fleets in commercial motor, the chances are they probably have some kind of connectivity, they have some kind of telematics device in them. I think that industry has really popped up in the last 10 years and grown exponentially. But I think the challenge is those telematics companies have not promised, but said that fleets will save money coming from fuel cards, coming from insurance, come from a better performing fleet. But I think the challenge is tying that through to the actual end data is very difficult when basically the commercial motor market operates in a number of different silos. So, insurers ultimately are not looking at telematics data, or if they do, they're not pricing off the back of it, they're pricing off traditional factors. So therefore, for the telematics industry as a whole, it actually it's pretty problematic for them to prove value with third parties and with fleets. So I think, our approach is really tying everything together. So we, as I said earlier, we spend a lot of time with every single TSP telematics service provider or OEM directly, integrating, validating the data coming from that vehicle to make sure that we can price off the back of it. And then we price off the back of it, and your insurance, has the ability to come down, or your premium has the ability to come down. So if you work with us and our risk management tools, you can save money. Because I think, at the end of the day, that's what a fleet wants. They want to save money. That's the key thing. It's driving their P&L, it's driving their return, whatever it might be. So I think from that aspect, we're very different to the wider market. The second thing is that a lot of telematics companies are sharing third-party events with insurers, but again, those insurers aren't necessarily looking at it from a pricing perspective. They're just looking at a general sort of risk scoring or sort of risk understanding of the fleet, whereas to us, that really is the core of what we're doing. And because we are layering that on top with driver data, with geospatial data, and we're not looking at third-party events coming from a telematics provider, we're looking at the raw data. It gives us this real granular understanding of risk that we are so confident that we can A, price it, and B, can help a fleet reduce their costs by targeting things that we're seeing, trends that we're picking up. We're picking up that this vehicle actually is trending towards a crash because of reasons X, Y, and Z, and this is how you save it. So I think that is what really gives us an advantage, is that we are using all of that data and all of that telematics, bringing it into something that saves money for fleets and really ties it together naturally, because they can see it. You can open up the platform today as a fleet, and you can basically see the action that you took last week, and you can see how your premium was dropped from £2,000 to £1,900, or whatever that number might be. So you can actually see, and you can then show your CFO or your MD or whoever it might be that the work that I've taken last week with these group of drivers is making a real difference. Whereas I think that is very hard for you to do if you're just looking at a risk management solution or system, because you can say, yes, I think I've reduced fuel costs here, or maybe the fleet has been more efficient, but how do you actually quantify that?
No, I think it's a really important point, and it's the quantifiable stuff. But I was thinking about the richness of that relationship, and obviously we've talked about stickiness of customers, but I don't know if I shared this with you, but I I used to work in the glamorous world of motor fleet claims when I first left university.
Interesting.
I did that classic thing. Came out as a grad, had no idea what I was doing. There happened to be a really big RSA office in my town, and I think the week I was sort of finished at university, they said we are hiring, and I walked in and they offered me the princely sum of, I don't know, probably £18,000, and I thought, I'm loaded, let's go.
Yeah.
And but what I always struck me is that we worked on specific accounts, and I was fortunate enough to be in some of the claims relationship management meetings, and if I look back now, we had so little data to share with them, and actually from a company point of view, and I know this is not the purpose, but you'd be like the whipping boy, because essentially it was always like they were always unhappy. There was always like, right, well, we've had this many claims, it took you too long to get this together, and what could you do better, and can we save money? And there was nothing that we had to sort of share back to say, well, actually, your drivers are always breaking the speed limit, or the vehicles aren't being serviced very often, or we just didn't have information. So as a result, it was a negative relationship always, and it was always an imposition of power, a disadvantage. And I'm not saying it's using that information to put yourself in a position of power, but it was more actually that if you feed back as to why things haven't happened, I think about my role. I'm an executive search consultant. Sometimes, unfortunately, it doesn't go brilliantly. If you've got the data points to say, well, look, this is what we're doing wrong, and it might be that we're taking too long to interview, or we're putting too many stages in, or we're making offers that are below market rate. All of that is only helpful if I can present you with all the data, because we can go, look, we can quantify that. So that kind of relationship becomes much more valued as well. And that's what all I could think about you saying that. It's like that information, even if it's information you don't want to see.
Yeah. I think that's equally as important as, the bad information. Yes. Whether it's claims or whether it's a driver that's performing terribly and is costing you a lot more. I think that's actually one of the most amazing things about our platform, is that a lot of the fleets that we talk to and the insights that we're giving back for our customer success team is to go, no, that driver is one of our best drivers. No, he or she is, doing terrific. He's picking up a load of passengers, dropping off parcels, whatever it might be. We go, actually, just have a look at this data. And, a couple of weeks later, they actually twigged that a lot of their best drivers are their worst drivers, because they're driving like crazy to pick up the next passenger, or, drop a parcel or whatever it might be. And actually, they're not listening to basically the recommendations that we or the fleet are giving them. But to their mind, all they're seeing is driver X earns, Y in terms of revenue. And that's terrific. But actually, that driver has, crashed into a third party, has, knocked over bicycles, whatever it might be. And it's costing them a lot of money on that side of things. So I think it's that ability for understanding of transparency, to see what's happening, to be able to, dig into any particular claim, to dig into any particular driver, see how they're driving over a period of time. Whereas historically, what do you have? You don't know how the premium is being calculated on day one. You might have a rough understanding of some of the claims through the third party in terms of what's going on, but you probably don't exactly know where it is in that claims journey. And when it comes to your renewal, you don't really know if your premium is going to fall by 5% or increase by 10%. Whereas, what we're trying to do is say, here's everything about your fleet. Here's everything about every individual trip. This is what we're predicting the premium will be next week, next month, last week, last month. This is what this driver is doing, and this is what you should do about it. So that, you as a fleet manager, you have the ability to query it. You can look at a transaction and say, hang on a second, that driver was not there at that moment in time. Something's gone wrong in your system. And then obviously we'll look into it. But just giving them the ability to look at all that information is critical. And again, obviously on the claims side, it gives both the fleet, our claims team, and our sort of third party just immediately a huge amount of insight about, what the claim is, where it happened, what did the third party say, what's the status of that claim, what is the information that we've seen, what's the history of that driver, is this their first claim, is their seventh claim in the last 12 months, time of day, all of these different things. So at least, you immediately have that understanding, and when you call that driver and you speak to them, you have an understanding, you know what roughly happened, and you're just confirming with the driver that, it's their mistake, or, third party's mistake, or whatever it might be. So to us, transparency is really critical, both in terms of data and in terms of pricing, and giving them that sort of full understanding of what is going on in their fleet.
I was thinking as you're saying that, it's like that, I was thinking about how do we used to find data, and some of the ways, most of the time we were getting data from the driver, and it was their perception of what happened. And I do think with your system, we do potentially miss some of the best parts of the claims process, which is reading claims forms from drivers and saying, you was just to put what was at fault. And I always remember one that came in going, swerve to avoid a badger who was at fault, the badger.
Badger probably was, to be fair.
It probably was.
He probably doesn't have insurance.
I know. I'm not sure we claim off him, but and then I was thinking about, we were talking about fleet. I got run over by my own Uber about 2 years ago. I went to get in an Uber. We were with a group of friends, so I went around the other side of the vehicle, and as I'm going back, he just inexplicably, this guy just reversed into me and like knocked me over. It wasn't like hard, just hurt my arm. Got back in the car, didn't mention it, and didn't give me 5 stars as a passenger, which is the greatest thing I've ever heard. But I'd love to see that claim form from him. That would be my fault for stepping behind the car. But no, I think taking the mystery out is what most people, because it's a lot of insurance's problem, is that it hides. The pricing's not transparent. People don't understand why the pricing's gone up. There's no engagement along the way. We have no information. I talk about it all the time, and I've bored people to death with it. I run a small business. I have my own insurance. I need professional indemnity cover. I'm always asked, how much cover do I need? I was like, I don't know. I've got no idea. I don't know what the average claim is in professional indemnity for a small recruitment business in the UK. I've absolutely no idea. So if you tell me that's what, so it's just this culture of transparency is so welcome from a client perspective, I would imagine.
So, and it also, I think the other thing that it links through is, our primary distribution channel is brokers. So at the moment they're liaising with the customer, and they might have a quarterly report or something they share back with the customer. With us, we can share insights back to them about how their fleet has, how their customer has performed, work that they've done, work that they can do going forward, so they can provide added value again back to the customer. So again, I think it helps them as a distribution source, that they can liaise with the customer and add value through their channels, as well as obviously us in our direct relationship with the customer. And then hopefully when, the next customer of theirs comes up to renewal, they obviously sort of promote us in terms of, potentially, insurance opportunity. But I think it's really interesting coming back to sort of, choosing insurance. To me, when I choose my own insurance, it's a question of price and, what has the claims experience been like? Those are the two things to me. When I choose my next, building and contents insurance, I had a really good claims experience recently. So 9 times out of 10, I'll probably go back with them as long as their price is half decent, because, I want to know where the claim is, what's happening. Is it third party? Is it my fault? Whatever it might be. So I think the more transparency in the industry, obviously to an extent, you don't need to know everything, I think will really help, and ultimately will help them work better with clients and brokers and all of the end consumers.
Yeah, completely. Really conscious of your time, so I'll sort of get things towards a conclusion. I just wanted to ask you a couple of things about Europe. Obviously, you made an acquisition. Are there more acquisitions part of the strategy to go into Europe? Is that on the agenda?
So at the moment, we have a sort of a dual approach. So we have organic and inorganic. We've obviously completed our first acquisition. We're looking at additional acquisitions, primarily at the moment in the UK. That's our focus. That's where we feel we can make the most difference at this moment in time. We're launching into Europe, hopefully at the end of next month, so the end of March, sort of leading into April. We are targeting Germany, Netherlands, Spain in sort of phase 1, and then phase 2 will be Italy and France, and that should all be live this year, which is super exciting. So that's an organic approach. We've got great capacity behind us that's going to support us on that journey. And I think the great thing is we've now learned a huge amount in the last year and a half in the UK in terms of, I think we now have about 60,000 vehicles on the platform. So we have a large quantum of data going through it on a daily basis. So we can take all of those learnings and all of the learnings around how we actually communicate to brokers and to customers about our proposition and take it into Europe. But we feel Europe is a huge opportunity because in many ways it's perhaps more traditional than the UK. So at the moment, Europe is very much focused on organic strategy. In due course, of course, we could consider sort of the inorganic routes alongside that. But at the moment, super excited about launching across those markets and hopefully bringing the same value that we've achieved in the UK over into Europe.
Amazing. James, I think it's a lovely way to conclude the podcast. But I've started doing this now, which is doing myself out of the job. But presumably you're sort of launching and hiring. How should people best connect with you? Can they reach out to you on LinkedIn? Are you active
of course.
on there?
Yeah, active on LinkedIn. So yeah, please do reach out. We're always looking for great people from across the insurance industry, commercial, and also sort of, let's say, data science and engineering. So yeah, please do reach out. We obviously have our careers page as well. So we have a number of roles out there, and we're going to be hiring more and more, whether in the UK or into Europe. So please do reach out, contact us, leverage the careers page. But yeah, thank you very much, Alex. It's been great talking to you about insurance and all things that we're doing.
Awesome. Thank you so much, James. I really appreciate your time. Thanks again.
Take care.
Cheers, pal.